is time for Mike on the Money. Hi, Mike. We know this has been a tough year for investors. Many different types of investments struggled as the Fed kept hiking interest rates. And we're now just a few weeks away from the end of the year. So, of course, investors may be looking ahead to next year. Our friend Mike Giordano, financial advisor with Williams Wealth Management, is here to look to the future with us. Did you bring your crystal ball?
Yeah, but I don't have my McLaren, so we're not going back to the future.
Okay, looking ahead to the future. So what is the outlook for the markets in 2023?
You know, a lot of people are excited to move on past 2022, especially investors. In 2023, there's so much uncertainty still that Wall Street strategists are all over the board. But if you take right in the middle, their base forecast is that we'll probably end up at the end of next year, kind of where we are this year. But that doesn't mean it's going to be boring, because you're going to have rocky ups and downs, and everything's going to be dictated based on the path of inflation. So we've got one good inflation report last month. We're going to get another read next week. We need to see a trend, and if we can get inflation down, then maybe we can start to smooth things out next year.
Okay, we have heard recession talk all year this year. You say that hasn't happened yet, but is a recession still the expectation?
Yeah, it's like that old, it still is the expectation, and it's like that old saying that things seem to move slower than you think, then faster than you thought. And that's kind of what's happening here. It's like we've been talking about recession probably since, the springtime. And with all of the Fed rate hikes, you would likely see a recession eventually come on, because it's like whacking a piñata. You keep hitting it and hitting it and hitting it. Eventually that candy's going to fall out. You don't know when it's going to fall out, and that's kind of the case right now. But as long as the Fed has to keep hiking interest rates, the risks of recession just keep increasing.
Okay, so right now, what move should investors make, if any, given the continued uncertainty?
Yeah, so given all that uncertainty, like I said, you can say that the path next year, maybe we may end up in a year kind of where we are. Nobody knows how it's ultimately going to play out. So the most important thing is you have to look at your investments and say, am I driving at the right speed? Am I comfortable with the speed I'm driving? Then you have to start asking yourself some questions about, what are my goals now? This is a perfect time of year to look at your goals. And so start assessing the goals now versus where they were before. Do you still want to retire at the same date? Are your kids still looking to go to the same colleges? Is your lifestyle cost more now than it did a year ago? That's going to dictate how much money you need. And so how much money you need, when you need it, those are the principal questions you're trying to figure out. So if you need a lot of money in the next couple of years, you just need to basically keep that in savings. Money you need 5 years and beyond, you can invest that money. So if you need $200,000 in 10 years, maybe you only need $100,000 to save if you put it into assets that will outpace inflation.
All right, great advice there. This is always the time of year for reflection, isn't it?
Reflection's a wonderful thing.
It is.
I love it.
Thank you so much.
You bet.
We'll see you next week, and we'll be right back.